Hey everyone, the war in the Middle East is still going on, but the markets seem to care less and less. We're seeing fresh highs on Wall Street, and Bitcoin and altcoins are holding up really well right now. So, of course, this is the kind of moment where you want to spot opportunities. Maybe that includes the new crypto model portfolio we introduced over the weekend. I'll talk about that in the next few minutes, and also how much further the big US indices can run, and when things actually start to get a bit more critical. So welcome, and I'm glad you're back with us, Oliver Michel.
Hi.
We really only had a short break from each other. Over the weekend at Invest, we presented a new model portfolio, and we'll dig into what's in it a bit more as we go. Just real quick, it's built for a shorter time frame of about 3 to 4 months, so you can take profits if everything goes the way you're planning. But of course, we've got to ask, where are you getting your optimism from right now for such a short window?
Yeah, that optimism is coming pretty clearly from the US indices. We'll get into that today. Like we said last week, the battle would be decided at the retracements. That battle's over. And all those retracement levels got cleared with new all-time highs. So yeah, everything looks great. It does make you wonder. I mean, the Americans are at war. The news is pretty sketchy. One ultimatum after another. But like you said up front, bad headlines clearly don't seem to hurt the markets at all. And in the wake of the US indices, I clearly see our crypto following too, just with a bit of a delay. And I'm expecting the next 3 to 4 months to be really, really good. And if you're not in yet, you should take advantage of this window. And if you are in, maybe think again about tweaking things here and there. The timing is good. And you should do something.
Like you said, we've had a lot of back and forth ultimatums from both sides, shots fired at different ships, but it feels like the market's built up some real resilience and is just looking ahead at what comes next. Right now, at least Iran has apparently confirmed it's open to talks. The market's basically tuning it out for the moment. And besides this back and forth, which is already plenty but still not enough to move markets, there really wasn't that much news this week. We didn't have much in terms of economic data, but what we did get was a big one, the PPI numbers. Let's dig into that a bit more.
Yeah, that's the producer price index, basically the prices buyers are paying, producer prices. And the PPI was 3.4 in February, 4.6 was expected for March, and it came in at 4.0, which honestly isn't bad. 4.0 versus 4.6 is good. 4.0 versus 3.4, of course, isn't so great. What's really interesting, of course, is the PPI core. Core always leaves out food and energy. Mm-hmm. And energy especially is a massive price driver. And what you can see really clearly here is we were at 3.8 last month, and now we're back at 3.8 again. That's a pretty clear sign that going forward, inflation is being driven by energy and food, and that the rest is set up in a way that prices are either flat or even falling, which of course, when it comes to inflation, means the rate could gradually come down. Johanna picking up on this line here, which is really interesting, 3.8 to 3.8 these days. I've been thinking about inflation again, and it's not a new idea. We talked about it a year ago in our interview series, and anyone can follow it with common sense, even without any economics background. If the economy keeps getting noticeably worse, there's a good chance a lot of companies will sooner or later cut prices. Meaning, inventories are full and have to be cleared out, and to move them, you drop prices. And when prices drop, that automatically means inflation comes down. That's one of the most important automatic stabilizers in economics. So what we're seeing here is a stabilization or a move downward. And yeah, if I'm right that the economy really is at the end, that the US economy is at the end, if things are trending downward, then it's pretty clear inflation, as meant in this context, has to come down too. And once it does, we've got a better shot at seeing movement again. In the Fed Watch tool, instead of this standstill, for now it stays at the current rate. So yeah, there's some hope it won't just stay stuck here. And we could even get rate cuts sooner. The market's basically pricing in June 9th, next year. And there's nothing showing up for next Wednesday either. But in between, based on what I just laid out, I think there's a good chance something changes here, that it kind of has to.
The so-called new guy at the top of the Fed is basically already waiting in the wings. Kevin Walsh is also going to speak again today and will definitely be listening closely. For sure, he doesn't want to, in his first speech, play into Donald Trump's hands or go against him, but he's also known for not being someone who cuts rates right away. I think both of those things could still shift the Fed Watch tool a bit in the near term.
He needs a solid reason to do it. And like I said, what I just explained would be a really good reason, because that's basic economics. That's how it usually works.
Usually, sure, but these days nothing is usual. Still, this week we don't have any more economic data on the calendar, at least no hard numbers we're expecting, but we are watching that the US-Iran conflict and whether that ultimatum is going to expire. They said this ultimatum runs out Wednesday evening US time. I mentioned it earlier, and right now it does look like that, even though beforehand the US often says, yeah, we're definitely heading for a deal. We're basically already agreed. Iran has now also confirmed it's at least interested in talks to reach an agreement. So of course we're hoping this whole thing can get back on track. Otherwise, I think it could really spread if they walk away from each other again in this next round. What we've definitely seen is the US indexes are pretty unfazed by the situation. Last week, the Nasdaq and the S&P 500 hit new all-time highs. And we talked here last Tuesday that technically the Nasdaq was at a key spot with that fight over the retracements. Did it work out?
Yeah, as you can see here, this is the Nasdaq in the daily chart, and this vertical line is last Monday. Because when we meet Tuesday mornings, we don't have the US data yet. So what we had up last Tuesday was that last green candle, and we were right in the middle of the three key retracements, 786, 702, 618, and we said, okay, now the battle starts, like you just put it. And that level got taken out. And you can see here what happened on Tuesday, Wednesday, Thursday, and Friday. We worked through the retracements and then step by step printed new all-time highs and moved into the target zone around 27,000. So yeah, we had the big trend, then we had a big correction. And what we said last week, that we wanted to see the trend continue as we moved through the retracements, that's exactly what happened. But we also said that it won't keep going forever, and right here we're definitely expecting a small pullback, and that could honestly start any time now. You can see why I brought the RSI along. Our viewers know it by now. We're overbought here, so you can assume we drop a bit first, and at the same time we'll probably get a correction here. And once that correction is done, in my view, we go up one last time to 27,000. Maybe if there's real momentum to 28 to 29,000. So those two support zones, I think we can take them off, especially the lower critical one. This support held, we're moving higher, and if we laid out the roadmap today, I'd say I'd already color in half of that final move green, because the first part of the trip is done. We'll get a correction, then we'll push into the final all-time highs, and after that, I personally expect a rollover off.
So you already let it slip? You didn't bring a game plan today?
No.
But before we even get there, to what I wouldn't call a replacement for the plan, but still makes today exciting, let's first look at the other US indexes and of course Bitcoin and so-called altcoins. With the Russell, we've always said if the Russell starts pulling, meaning liquidity is really flowing in, that's a good sign for crypto, because the Russell with lots of smaller companies also stands for higher risk. And here too we're seeing pressure to the upside.
Yeah, it signals higher risk because the companies are smaller, and that also means breadth. So the liquidity clearly coming into the market isn't just hitting the big names, it's also reaching all the small ones. And that's what's driving this really strong move higher. Basically green candles day after day with an absolute all-time high this morning. We just clipped 2800, coming in at 2801. So what we've been calling the final all-time high for over a year is now actually in. And here you can see it really well, April 13th, last Monday, how the whole thing has been developing upward. The retracements got cleared, and the last all-time high from here basically got taken out. We printed a new all-time high. Same thing here though. Be careful, there's going to be a pullback. And just like with NASA, we drop down here and then head back up here. But the fact that the Russell has been ripping, we've been using it for over a year now as a steady indicator for what crypto might do. It took off exactly like we wanted, and that's a pretty good sign. Liquidity is coming in across the board, it's flowing into risk assets, and that includes our crypto too. So maybe we tag 2900 or in the hype even 3000 as that psychological level we aim for before we get a rollover. Yep.
Just to round it out, let's also look at the Dow Jones and the S&P 500 on the daily chart. Same story here. After the correction, we got that strong push up and the retracement levels have been broken for now.
Mostly on the Dow, which is lagging the other three a bit. You can see the 1, the 0, and the move back up into those retracements. And last week we were in that zone where we said we were heading for the 618. And you can see it also cracked the 786 over the week. It's the only one that hasn't printed a new all-time high versus the last one here, but I think that's just a matter of time. Still, I'm expecting a pullback here too before we push higher. And last but not least, the S&P, it looks awesome. This move up here, after that 10% correction, it's pushing higher. Same thing here last week, we were in the retracements, and the rest of the week, including yesterday, was used to print a new all-time high. I said it right at the start, we talked about that decision point down in the retracement zone. That was basically the takeaway from our last video, and that decision got made. The retracements are done, new all-time highs got printed, and that's why I think we're now on the path to the final emphasis on final all-time highs before we get the rollover. And I think that's going to have a massive impact on our crypto, and especially when I look at the S&P, one more superlative. We've only got it here in the daily view, but over the last 3 weeks, it's put up more than 3% each week. That's happened 3 times in the last 76 years. So yeah, we've really seen something pretty special in the S&P these past 3 weeks. And if we cut it here, and this wasn't a crypto talk, then what we've just worked through would definitely be for US stockholders. And yeah, there are plenty in Germany who own US stocks. Some pretty useful info on how you might want to be positioned over the next few weeks. How you could, should, and kind of have to position yourself.
It's all nice and all, and it played out just like you thought, but
in the US indices.
But we're still missing someone that has to get pulled along, and that's Bitcoin. Bitcoin, and then of course the altcoins after that. that massive push upward we've seen in the US indices. You'd obviously like to see that in crypto too, but that means there's still plenty of upside left, because even though we're, like I said in the intro, fairly stable overall despite a few disruptions in the truest sense of the word, we just don't have that kind of upward pressure and that euphoria. We saw Bitcoin at 126,000, like you always like to say, and that was an all-time high that kind of happened quietly without that push we saw before. So of course we're hoping that push is still coming. What's it look like on the daily for Bitcoin? We've been stuck in this sideways range for more than 69 days now after the correction we saw. It's about time we get some light at the end of the tunnel, right?
Yeah, but that's a really good point you're making. Just think back to the big US index charts and how insanely steep that run-up was. And that kind of steep move, that parabolic move, is usually a pretty good indicator we're in the final stretch of a huge move. If that really was Bitcoin's all-time high at 126, like you said, you just didn't feel that steep move up, that hype, and that's basically why I've always felt, yeah, it was a top, it was an all-time high, but this correction is definitely not a bear market. And in the end, we'll see how the whole thing plays out. Yeah, we've had a 52% correction. We've been moving sideways now, longer than we normally would at this stage, because those 69 days we brought up last week, we've now been past that since last Thursday. And we're still moving sideways. You always get comments like, that Michael, he's been saying the same thing for weeks. The same thing. Yeah, it's been 10 weeks now. 10 weeks where it's basically bounced between 60 and 75,000. And there's nothing new to say except what you see over here on the right. And you can try to figure out some probabilities. After a move like this, given the market situation, how likely is it we go up or we go down? As of April 21st, like you said, we're still ranging more than 69 days. We're still building a bottom, like we've been saying for weeks. And of course, it'd be nice, like you just said, follow. If Bitcoin and the altcoins follow the US indexes because they've shown the way, we called that really well. And the downside paths are still there. Everybody knows them. Path down to 60, path down below 60, basically to sweep up all the stop losses and to shake out the leveraged longs. But there's also more or less the option of a path upward, kind of like where it's marked here. And the longer I look at it, especially together with the US indexes, sure, if the US index is correct now, we could get another correction here too. But it's also totally possible we don't go along with the pullback in the coins and just rip straight higher. And by higher, I mean if this is the one and that's the zero, like we always say, then you've got the three big retracements right here. And since we've already coined that phrase, it could be that Bitcoin also has to fight it out here in the retracement zone. And then we'll see if it holds up. Either it keeps going in a continuation rally, or it was just a really nice relief rally, and we head lower along with the big US indices tied to the big rollover. But right now, one thing's clear. As investors, as sensible and attentive investors, we always have to consider every path. Why could it go up? When could it go up? And yes, it can go down too. You've got to factor that in. But what I can say is, based on this run to the right here, about 69 days long, a breakout either way is pretty much imminent. It's right around the corner, and I can definitely see it going up, one way or another.
You brought up Bitcoin on the weekly chart. Twice today, twice with different indicators. First up, Bitcoin on a weekly basis with the RSI. Why the RSI? What changed here, and what should we be watching for?
Yeah, we always include the Bitcoin weekly chart. That's our strongest time frame. Sure, you can watch the daily chart with all the moves, but you don't really get the big picture. If the next 3 or 4 months are what really matter, then a monthly view is way too coarse. So you should focus on the weekly chart to get a feel for the move. This is the weekly chart since the absolute low, and you can see it's been moving up. That up move got slightly broken here because we didn't get a higher low, we got a lower low, like we've explained a million times. And like we said, that could mean the bigger trend got broken and a rollover might be starting. The RSI basically shows the strength of a move, and what we said, what matters for us now is the RSI in different views: long-term, mid-term, and short-term. Short-term, we had this green line here, and what we've been watching for weeks is, does it break out here? And that's exactly what it's doing. And that's basically this push-up right here. And it's great to watch that as a positive signal. That's also today's video thumbnail. All the indicators are turning positive. That's also today's video thumbnail. All the indicators are turning positive. You can see it really clearly here. Exactly what we anticipated and hoped for is happening. The move is up. We've had 4 green weeks in a row, including this one. And I can totally imagine that what we keep listing here is slowly kicking in. The US government isn't taking the war as seriously anymore. It could be over soon. A stimulus package, the midterms coming up, the Fed could step in, and it's already pumping tons of liquidity into the market. The US indices are showing rotation from bigger names into smaller ones. The breadth we talked about, including our cryptos, is all positive. So I can totally see us getting a move up here based on the daily chart we just saw and the retracements, at least.
Let's look at Bitcoin with the MACD again. Last week we already looked at the monthly MACD on Bitcoin, and you could see the dark red bar turned into a light red, kind of pink. So on the weekly view it should have flipped to green by now too.
Yeah, we saw that on the IS weekly chart, that the MACD flipped into the green zone as far as the histogram goes. And I just wanted to show it again here on Bitcoin on the weekly chart, because these two views are what we should focus on, since the MACD flipping into the green zone gives us another positive indicator. Similar to June 2022. That's this area here where it also flipped from red to green, and that was basically the point where the whole move up really started. And that's exactly what we're hoping for right now, that over the next 15, 20 weeks of this move up, and we basically push into this area, maybe even a bit higher, before we then watch in sync with the US indices. Which way it goes? Probably down. A pullback is still possible. I don't want to rule it out, because you can see it clearly here. It flipped from red to green. But it still dipped again briefly before moving up. You can also see it doesn't make a big move in the MACD, since it's a lagging logarithmic indicator. So we could definitely get a few small pullbacks here, like I said, without losing the green histogram. So yeah, Johanna, what you have to say is this whole thing here. If we made that lower low at 60,000 compared to that last higher low, then this whole thing was a move down. Call it a full bear market if you want, but either way it was a correction, and that correction was about 52% in Bitcoin. It was definitely a correction, and like we've said a million times, corrections are opportunities. We saw the RSI on Bitcoin was down in the very bottom range, and the MACD you see here was deep red. Those are all indicators. Also in terms of the fear and greed index, we were at a max of 4. So like you said, there was blood in the streets, and that's basically the moment. where you can say corrections are opportunities. And if you combine that with the fact that we're at the very end of a cycle, and this might be the final exponential parabolic push, then that's a pretty solid combo. Pullbacks are opportunities, the final push, that last bit of hype. That's the motivation to jump back into crypto over the next 3 or 4 months. If you're not in yet, or if you already are, you're like, all right, I'll grab 1 or 2 more coins because a lot's happening.
All right, let's leave the chart stuff as chart stuff for now and keep watching to see if it really keeps turning. But the fundamentals matter too, and the news has been positive non-stop lately. What was it?
Yeah, we always round it up here. Strategy bought $2.5 billion worth of Bitcoin last week. That's absolutely insane. We also had an awesome week for spot Bitcoin ETFs with a 1 billion inflow, so a ton came in, and that's basically why we moved up so nicely last week. And last Friday, with $363 million, was something really special too. And yesterday, Monday, we had an inflow of 238 million. So yeah, spot Bitcoin ETFs are kicking back in again, which is actually a pretty interesting headline since we've been talking about tariffs all the time. Mm-hmm. The Supreme Court shot down the US government's tariff approach and said companies that had to carry those tariffs as importers because they had to pay the retaliatory duties have to be paid back, and now it looks like the US is starting the refund, and $166 billion will be spread across up to 330,000 importers. They have to apply, and then within 60 to 90 days, they'll get back what they paid in duties for those retaliatory tariffs. So that puts 166 billion, a whole lot of cash, back into the market, and importers are companies too, including small businesses. And that's definitely one reason why these kinds of companies see real upside potential in Russell and in Russell overall. So yeah, absolutely good news. But in general, Johanna, looks like the one big news block is the US-Iran conflict, and we've talked about that in detail. Like I already said in our Telegram channel, the banks are stirring things up again over the Clarity Act, and people are assuming we might not see real movement until May. They're really trying to torpedo the Clarity Act. Kind of a shame. Honestly, we'll see how it plays out. Might take someone stepping in and laying down the law, but other than stuff like that, there's not much else. It's basically dead quiet right now, like people say.
It can flip back really fast because things change by the hour. Personally, I prefer it when something happens so we've actually got something to report. Otherwise, it's kind of like, fishing in the dark. People who tune in regularly probably expect we'll keep going with altcoins. Today's a bit different though. We mentioned it up front. We want to take a closer look at the model portfolio we recently presented at Invest. There's no real agenda today. We'll just go over the portfolio in broad strokes to put it in context, how it came together, and why now. Viewers and the community can find the full dedicated talk we did at Invest on our YouTube channel. That's where we go into it exclusively. Still, this model portfolio does include altcoins. Let's walk through it. You broke it into 3 areas: finance, tokenization, meaning real-world assets, and AI. Let's start with finance, and you've got the percentage weights shown in those small black numbers. In finance, except for one coin, your picks aren't really a surprise.
Yeah, it's exactly like you said. The kickoff for this model portfolio was April 18th. That was the talk we recorded, 45 minutes. It's on our YouTube channel. So if you want to go through everything I'm saying now in detail, you should give our dialogue talk. Another listen. It'll definitely be worth it for some of you. The motivation behind all of this is important. I've already laid out that motivation here and there during this interview. We've seen corrections. We've seen corrections like Bitcoin down 52%, ES and XLP corrected even more, and we might now see one last smaller correction in the US indexes. We talked about the RSI being basically at the floor, historic lows, and the fear and greed index was also at a historic low. So yeah, these were insanely low levels. And when you get lows like that, there are obviously opportunities in it. I planned the whole thing over 3 to 4 months because I still personally believe that together with the US indexes, we're in the final leg up, and that Bitcoin and the altcoins will use that to push again. And that push, in my view, gives you another chance. Someone wrote in the comments like, what we're pitching here is irresponsible. I think it's irresponsible if we see this chance and don't talk about it. Everyone can decide for themselves if they want to do it. Main thing is, after 3 or 4 months for an optimized hodl, once that plays out, you should definitely sell, because after that, when we go into the rollover, we'll see prices on these coins that are way lower than the entry prices from last Saturday. Sure, you can just keep hodling too, thinking 2030, 2031, 2032. Yeah, and with this portfolio, you're definitely on the plus side. We're heading into the final hype. Utility, paired with a correction, that's basically that boom effect. You've got the correction on one side, then you move into the final hype, parabolic, and that is the potential over the next 3 or 4 months, which is why we moved into this area.
So 3 to 4 months. That means you're basically ignoring the tax side of it. After 3 or 4 months, once the peak is hit, you've got to put feelings aside and be able to let the coins go.
If you're up 200% here over the next 3 or 4 months, you should be ready to pay taxes because you still have plenty left.
But like we said up front, let's still walk through the 3 areas. We'll start with finance, Bitcoin, Ethereum, XRP, and one coin we haven't really talked about in these interviews yet, Canton. Why?
Yeah, the finance area. I'll keep it really short here. The whole blockchain and crypto space is basically here to modernize finance, like the processes and the tech behind it. And I picked Bitcoin, Ethereum, and XRP. I mean, everybody knows those. Bitcoin weighted at 15%, ETH at 20%, and XRP at 30%. I see Bitcoin as a store of value, ETH mainly as a layer 1 blockchain with smart contracts, Wall Street's favorite. A lot's going to happen there for sure. And I see XRP tied to cross-border payments. The goal is to grab a significant chunk of SWIFT. And if that works out, that's definitely a once-in-a-century opportunity. And then lastly, there's Canton. Canton is a new blockchain that was set up by consulting firms, exchanges, and banks coming together. Deutsche Börse, for example, is in that consortium, and everybody has their own piece. But the idea is to trade real-world assets with each other and build the right layer for it. That's Canton. What's special about Canton is that these subnets can create privacy. So basically you can transfer something, but you can't see from where to where, and you can't see how much either. There are a few big companies behind it. It's held up really well since November last year, since it got listed. So I think it's actually a pretty interesting coin. One I've been watching since last November, and like I wrote in the Telegram channel, I'll probably buy it sometime this week. I don't have it yet. The second big block is tokenizing real-world assets. If the first layer is basically where everything gets exchanged, then the question is, what are you actually exchanging there? What are you trading there? What are you settling there? What are you selling? What are you buying? And that's basically the second area. It's about tokenizing everything over the next few years, and kind of breaking it into these little chunks that can then be written onto the blockchain. Whether it's stocks getting tokenized, real estate getting tokenized, or anything else, at the end of the day, everything will be tokenized, interchangeable, and tradable on the blockchain. And Ondo is a tokenization platform where you can basically tokenize a real asset like a property, or tokenize a stock, or tokenize a fund, issue fund shares that are tokenized. And the moment a tokenized stock, for example, gets written onto a blockchain, that stock's value can change. And to make sure what gets written on the blockchain is right, that it's accurate, that the value matches, that the stock price in this example is correct, that's where Chainlink comes in. They solve the Oracle problem. So yeah, that's why I see those two as two really important coins in this really important area. Finance is clearly the biggest market you can imagine. The capital markets are the biggest market, period. That's getting revolutionized, getting rebuilt, and you've got to be in on that. This is about an internet of value. What value is actually being moved around? The real world assets get tokenized. Two interesting coins, and who plays a big role there? Of course, the AI agents play a big role too. And yeah, those AI agents first have to be built. That's what virtuals are for. AI agents get brought to life, they're programmed, and since they need to talk to each other, like when they're swapping financial data, whatever, and we always use the fridge example. When it orders from Rue and pays, it doesn't do it. With euros, a bank account, and a normal transfer, it has its wallet, and from that wallet, it sends it over the blockchain. The exact amount on the invoice, and those light, simple, structured blockchains built for AI agent communication, like Near, for example. So with that, you've got two more coins that are interesting. And then the question came up, where's Solana?
Mm-hmm.
I said in the talk, sure, where it says XRP, you could also write XLM, and sure, where it says ES, you could also write Solana or SUI. But you can also overdo it. And it's only meant to be a model portfolio, a starter setup for a certain period of time. You can dress it up however you want and add 2 or 3 more coins. But for someone just getting started, I think that's plenty for now. And then we can see what happens over the next 3 or 4 months.
Oliver, of course, we'll keep running this model portfolio, track the performance, and keep our viewers and our community posted on entries and exits. And I'm curious to see how this all develops over the next 3 to 4 months. For now, thanks a lot for today. Folks, we've still got a few things on the agenda we'll be watching, like the ultimatum deadline between Iran and the US and Israel, and of course Kevin Wash's speech, the new guy at the Fed. As always, we'll have everything important right here.